Distinguished speakers, members of the media, ladies and gentlemen, good morning and a very warm welcome to the launch of the initial public offering of Hela Apparel Holdings Limited. My name is Adam Collins, Special Projects and Investor Relations Lead for Hela, and it's my pleasure to moderate this session. With over 3 decades of experience in the industry, Hela is one of Sri Lanka's leading apparel supply chain solution providers. By leveraging its impressive global footprint and experienced management team, the company has built profitable and strategic relationships with some of the world's leading apparel brands, while also benefiting the lives of its 18,000-strong workforce across Sri Lanka and Africa through its focus on building social capital. A true Sri Lankan multinational, Hela is leveraging local values to build global value for all its stakeholders. As the company stands poised on its next phase of growth, we are extremely pleased to announce this landmark IPO on the Colombo Stock Exchange, opening on Wednesday, 12th January. The first by a Sri Lankan apparel manufacturer with a global footprint. We are looking forward to sharing the next stage of our journey with the public, and over the next half an hour or so, we will be providing an overview of the opportunity at hand. We will shortly be moving into a series of short presentations on the company and the IPO opportunity, which will be followed by a brief Q&A session. If you have any questions at any point during the session, we would encourage you to type these into the Zoom chat box, and we will aim to get through as many as possible during the Q&A session. Further information about the IPO and how to apply is also available on our IPO microsite at ipo.helaclothing.com. Before handing over to our first speaker, please allow me to introduce our distinguished head table for today's event. At my far right, we have Mr. Deshan Pushparaja, Managing Director of Cal Partners, followed by Mr. Moiz Remanji, Group Chief Financial Officer of Hela Apparel Holdings. And in the middle, we have Mr. A.R. Rasaya, Chairman of Hela Apparel Holdings, followed by Mr. Dilanka Jinadasa, Group Chief Executive Officer. And on my immediate right, we have Mr. Zakir Mohammed Ali, Group Chief Operating Officer and Head of Investment Banking at CT CLSA Holdings. Without further ado, I would like to invite the Chairman of Hela, Mr. A.R. Rasaya, to provide the welcome address.
Morning, everybody. Morning to all the viewers and all those who are present here. A very warm welcome for this IPO session of Hela Apparel Holding Company. As you would know, apparel industry is more than 30 years old. And at that time, we not only got valuable foreign exchange, we got good management skills as well as foreign international technical expertise. We being Sri Lankans, we have gradually learned, gradually gathered momentum, and we now are in a position, in turn, not only to export garments, but also export our technical skill as well as our managerial ability. Hela, as you would know by now, is no exception. But we have our own standards and our own values. We do not imitate or follow anybody else. In that process, we have our own brand called Hela, where we have values, our processes, and the risk we take is all unique. At the same time, we maintain cultural and social standard, so much so all our customers are very, very happy with us and continue to deal with us. We are the first, as Adam said, first to go public in the sense that we are offering shares to the public so that they will also become partners of our growth. We are also the first to give social capital to our staff. So we have introduced a share option scheme to our staff so that they become members of the company as well. This certainly has encouraged them, motivated them, and they also feel that this company belongs to them. We also have our downs and issues, and the pandemic is the foremost one. It has affected all across the world, including Sri Lanka, and Hela has been no exception. We had issues with staff, closure of factories, absenteeism, and things like that from the staff point of view internally, and externally we had curfews, logistic problems, transport problems, supplier problems, and customer problems. But with all that, we didn't give up. We were resilient because our staff rose up to the occasion, and we in turn, as a first priority, looked after our staff's safety, comfort, and without saying made sure that they've all been vaccinated. These all come at a cost, but we did not cry or worry about our cost because we were very confident that we will progress forward. And indeed, that's what we have done. Our top line has grown well, our bottom line has grown well, and we have added about 4,000 additional staff to our cadre. We have expanded into Africa, as you would know, and including Kenya, Ethiopia, as well as Tanzania. And also now we are moving into Egypt. Having said that, the customers, our suppliers, have seen our performance, and they're very happy, and they continue to do with us. And one additional thing that we do is our innovation. We all the time innovate, all the time move forward, all the time look ahead, and that's one of the reasons of our success. The money that you put in or going to put in will not go waste. We have a clear, defined plan, and we have a clear thought as to what and how much we should get. Bulk of it will go into our supply chain, because a downward integration. We are going to get in and purchase a mill. A mill is required to produce fabric consistently and at timely versions, as well as reduce our consistent cost. The next item that we want to do is to develop our IT. The reason is, for our growth, we need constant and consistent information, as well as timely information. So the growth, we need timely information, as well as to maintain control. The other part will go to settle some of our debts. That will make our balance sheet that much stronger, so that we'll be ready to meet any financial implication or issues that will arise. And the last part will go for modernization of our assets. As you would know, growth is not possible with the existing assets. Even the new assets, we need modern technology. So therefore, the balance part will go for the investment in technology, which is on machines, etc. With that, I will welcome you to participate in our motto that we are going to be the first, or one of the first Sri Lankan companies which is going multinational. My colleagues will continue with whatever I left. They will give more details, and after which you're welcome to ask any questions. Thank you.
3 decades ago, Hela set out on a mission to change the apparel game. And now, 3 decades later, we're still pushing the boundaries of what's possible. At Hela, we're testing our minds to be different, to be better. We're always on top of our game with a vibe that keeps it fresh.
Hey, maybe you've heard of us, maybe even seen our logo, but you've definitely seen our work.
We're the team behind the team that brought you what you love to wear. We're the dreamers and the innovators imagining a more sustainable tomorrow. We're the ones leaving our mark across the globe, doing things that have never been done before, with our teams in New York to London to Paris. And our factories in Sri Lanka, Kenya, Ethiopia, and Egypt. Our operations extend across the map. We've got the power, the drive, and the teams to take on any scale of production. It's a grind that won't stop, with limits that are never confined. Launching new initiatives such as Hela Dirilia and PACE that not only economically empower our workforce, but also educate and enrich the lives of our global family, along with providing over 5 million litres of fresh water. And that's why we say yes to creating a better planet, and no to single-use plastic, waste, or any liquid discharge at our multiple factories powered by the sun. These are the people we would do anything for, the legends behind what we are today, the ones pushing the limits of apparel.
But that doesn't mean we're done. We're only just getting started. We are Hela.
Thank you, Mr. Rasa, for that insightful welcome address that helps to set the context for the opportunity offered by the Hela IPO. I would now like to invite Mr. Zakir Mohammed Ali, Group Chief Operating Officer and Head of Investment Banking at CT CLSA Holdings, to provide some opening remarks to introduce the presentation section of today's session.
Good morning all, and welcome to the launch of the initial public offering of Hela Apparel Holdings Limited. Hela is the first Sri Lankan apparel manufacturer with a global footprint to seek a listing on the Colombo Stock Exchange via an initial public offering. The company is a leading player in the sector with a significant presence in Sri Lanka and a growing presence in the African region, employing over 18,000 staff. The globally renowned brands such as Calvin Klein, Tommy Hilfiger, and Tesco are key clients of the company. As you all know, the apparel sector is a key contributor to the Sri Lankan economy, both in terms of revenue generation and employment creation. During the first 11 months of 2021, the sector contributed $4.5 billion in terms of export revenues and also employed over 400,000 workers. Hela is uniquely positioned with its culture of speed and agility, with its multi-country origin strategy, strong customer relationships, being the largest vendor, one of the largest vendors for PVL, spearheading Africa's apparel revolution, accounting for 18% or 19% of Kenya's apparel exports, and being a sustainable and ethical manufacturer. In addition, with Hela's revenue being 100% in dollars, it provides a shield against the depreciation of the Sri Lankan rupee. The $4 billion raised via the IPO will be used to fund the future growth plans of the company, backward integration strategies, and also strengthening the balance sheet. In valuing the company, we have used the Sri Lankan listed proxies and priced it at a significant discount, offering ample upside to potential investors. The IPO is priced at 15 rupees a share, issuing 267 million shares for a 20.5% stake in the company. The issue opens on 12 January, and we welcome you all to join Hela's exciting growth journey. Thank you.
Thank you, Zakir. We now move to the presentation section of today's session, which will be led by Mr. Dalanka Jinadasa, Group CEO of Hela, who will be followed by Mr. Moiz Ramanji, Group CFO, and Mr. Deshan Pushparaja, Managing Director of Cal Partners. Please feel free to continue sending in your questions via the Zoom chat box, as we will move to the Q&A session following the completion of the presentation. Dalanka, I would now like you to invite you to the podium to kick off the presentation.
Thanks, Zakir, for that kind introduction. Thank you to the media for joining this forum, and of course for all those who logged in online as well. So I think, as covered by our chairman and also with Zakir, Hela has been in the industry for over 30 years, but it's really been in the last 6 to 7 years that we really transformed our business with a clear focus on servicing our customers with unique bespoke solutions. So being in the apparel space, which, as you know, is a $3 trillion industry, the sky is the limit when it comes to scale. So how we really differentiated our value proposition is covered in this slide that you see on the screen right now. So Hela, with a manufacturing footprint across 6 countries, with 11 manufacturing facilities spread across that footprint. 7 of them being based here in Sri Lanka, and then, of course, us venturing into East Africa in 2015, starting with Kenya, and then expanding into Ethiopia, and now subsequently moving into North Africa with Egypt, which will kick off over the next few weeks. Each country that we have a presence in has a unique value proposition, which I'll cover in the subsequent slides. And on top of that, again, as mentioned by Zakir, we are a 100% export-oriented business, which allows us to generate all of our revenue in US dollar terms. We are expecting to finish the financial year, us being a March 31st company. We are quite confident that we'll finish the year with a top line of north of 270 million, closer towards the $300 million mark, which from a compounded annual growth rate standpoint has a CAGR of over 11% year on year. 18,000 workforce across the 6 countries that we operate in, and most importantly, a company that's powered with a digital core foundation through SAP. Quickly touching into our customer base, as you can see on the slide, we've got a whole spectrum of customers, be it global lifestyle brands like Calvin Klein and Tommy Hilfiger, leading luxury brands like Karl Lagerfeld, to your essentials channels like Tesco, Sainsbury, and Walmart. And the rationale for this was carefully calculated. What we wanted to do was for Hela to be a natural hedge, no matter what economic scenario plays out. So during a potential recession, how we can leverage distribution channels like the supermarkets, 2 times of economic boom, how we can capture that upside through servicing brands like Karl Lagerfeld and Calvin Klein. Going into our global presence, as mentioned, we started our international expansion in 2015, and at that time we had to make a very important decision. We could have expanded into Bangladesh like majority of the players here in Sri Lanka and abroad, but we realized that in 2015, if we followed that strategy, we would have been the last to enter Bangladesh. In 2015, we could have also explored opportunities like Vietnam chasing TPP, but then again, we would have probably been one before the last to enter that region. So what we wanted to really see was where could we have a first mover advantage? And with Africa being that final frontier when it comes to manufacturing, we thought, okay, that's the place to base ourselves in. So starting with Kenya in 2015, the factory that we took over at that time had just 200 employees, and today we are north of 5,000, accounting for nearly 20%, 19% to be exact, of Kenya's apparel exports. So essentially 1 out of 5 garments that's shipped out of Kenya is from a Hela facility. Then expanding into Ethiopia subsequently in 2017, starting with our first factory, pure greenfield opportunity there for us. That factory now has over 2,000 employees producing over 1.5 million pieces per month. The second factory that we expanded into in Ethiopia, which was an acquisition, so a brownfield opportunity, was acquired in December 2019 with the plant had capabilities to do very complex products like bras. And that particular facility, at the time we took over, had just 450 employees, and that too now has over 2,000 employees, and making it one of the largest duty-free bra plants in the world. So again, sticking to our strategy of how can we contain that first mover advantage and build that unique value proposition to our customers. The advantage of being in East Africa, or Africa in general, is of course is the fact that they are part of the African Growth and Opportunities Act, which gives you duty-free access to the US, you get duty-free access to Europe, and especially when you take countries like Ethiopia, they've got some of the world's best duty-free agreements where nearly 85% of the world's retail markets are completely, you get access to it completely on a duty-free manner. So for global brands that has a global footprint, that's that ideal one-stop shop when it comes to their supply chain needs. And that varies. It covers from China, India, Japan, Korea, to the West in Canada, Europe, and a couple of other countries, including South Africa. So again, a very, very unique country of origin strategy to have in our portfolio. So the next stage of our expansion really comes from North Africa, and we've earmarked Egypt as that destination. Egypt, as you guys know, has some of the world's best cotton, very long staple lengths, which helps you to produce very fine fabrics. And the fact that it's based in North Africa allows us to access Europe in a short lead time, like between 3 to 7 days. And also because of its close proximity to the Suez Channel, allows us to access the eastern coast of the US within 12 days. Again, making us a lot faster than some of the other traditional apparel manufacturing destinations in the Indian subcontinent or in the Far East. And apparel or fashion being a very time-sensitive product, these sort of shorter lead times allows us to, again, garner a competitive advantage, which not many of the other peers in the industry have. Sri Lanka will always be our center of excellence, our hub for innovation, product development, newness. We will always use Sri Lanka as our incubation center to test out new ideas, new concepts, and then deploy it once the proof of concept model has been mastered. Going into the key investment highlights, not to sound cliche, but our strength is our people, and our people is our strength. This management team who's been together over the last 6 to 7 years has truly transformed the business, the industry, including Hela itself. We've built a core competency around turning around businesses almost with a private equity mentality. So starting with Hela itself here in Sri Lanka, picking up assets, underutilized assets or underperforming assets over in Kenya, and then most recently being in Ethiopia. And what we really mastered is that because we've got a policy of having just one investment at a cash burn phase at a given time, it's really important that we turn around these assets that we pick up at a very fast pace. So with the first investment turning around in 22 months, we took that learning and deployed it into Ethiopia, where we turned around our first factory in Ethiopia in 13 months, the second factory in Ethiopia in 8 months, and our plan is to turn around the Egypt asset that we are planning to commence over the next few weeks in just 6 months. So again, taking those learnings and capitalizing on it. Some of the other, I won't touch on everything, but some of the other key highlights being, I touched on it a little before, is our bra facility in Ethiopia. It's got the capabilities and the possibility to service and manufacture some of the most complex bras, and the global duty-free access it has allows us to have a very unique competitive advantage at the same time as well. Sustainability, apparel being known for being the second largest polluting industry globally, sustainability is a key focus of the industry, and that has been accelerated with the pandemic. And the recent awards that we received from the likes of Tesco, Asda, and other customers within our portfolio for being the most sustainable vendor or the most sustainable factory is a great validation on our efforts in this front. So again, we truly feel that this will be a key differentiator for us in the time to come. For the next section on the financial highlights, I'd like to invite Moise Remanji, who is the CFO for Hela Apparel Holdings. Moise? Thanks.
Thank you, and good morning, everybody. As mentioned, I'll be taking you all through the financials and the numbers of the whole Hela story that has just been explained in the previous sections. Starting off with the first slide, which is on the key financial numbers on the P&L, the top line and the bottom line. And what we are showing in this slide is our performance over the past 2 years, as well as our projections for the next 2 years, including the current year. So the first point I'd like to really stress on is you can see a very substantial revenue growth, which translates to a CAGR of about 15.6% over the 4-year period. And as you can see, the revenue split has also been shown in this slide, where we're showing the revenue between Sri Lanka and Africa, generated out of Sri Lanka and generated out of Africa separately. And the biggest revenue growth is coming from the African side, which is one point that I'd like to stress on. Secondly, if you look at the revenue pattern, you'll see a decline in the previous financial year, which is FY21, which is essentially entirely due to the pandemic lockdown that we had in the first quarter, within the first half of the financial year. So the revenue drop is due to that. But thereafter, the momentum that was built in the second half of the FY21 financial year is the same momentum that has continued into the current financial year as well. And that's where you see the revenue ramp up taking place all the way up to 270 million and forecasted for the next financial year at 283 million. The other point that I'd like to draw your attention to is that in the previous financial year, which was the pandemic year, despite the revenue drop, you see a profit improvement from a $4.3 million to a $4.6 million during that period, which is testament to the good middle line and business bottom line performance that has taken place in that financial year. And it's the same trajectory, the same improvements that have carried forward into this year and the subsequent year as well, which is translating to a very, very healthy CAGR of profits of 45+%. So despite a revenue growth of a healthy revenue growth of CAGR 15.6% during this 3-year period, there is an even higher profit growth during the same period of 45.5% CAGR over this 3-year time zone. So that's giving a very quick overview on the top line financials, on the high level numbers. Moving into some of the ratios and KPIs on our financial performance, starting with earnings per share, which is what you see on the left-hand side chart of this slide. So earnings per share from a relatively good 0.89, moving all the way up to 2.18 during this 3-year period. Again, a substantial growth of 145%, by 145%. So a very healthy earnings growth, earnings per share growth. And also on the margin side, you will see that the PAT margin, to start off with, has been improved during this 4-year period, which is testament to the good performance because it's being achieved despite the top line growth, which usually has some erosion on the margins. You'll notice that there is some erosion on the GP margin in the mid-year. That's due to the freight challenges that you all hear about and read about that's going on all over the world. And also certain other expenditures which come along with the ramp up, which is basically to say that when you're expanding your business, there is a bit of a time lag between when the expenditures start kicking in and when the revenues start kicking in. The revenues kick in a few months later. So the impact of the ramp up cost is what you see in the GP in the mid-range period. But despite that, there's very good overhead management, there's good working capital management, where all the middle line expenses have been maintained, which ultimately translate to a very healthy profit margin improvement during the same period. So starting with the 2% in the financial year 20, moving all the way to a 5% profit margin in the financial year 22-23. So that's giving a good overview of the whole financial matrices and KPIs during this 4-year period. Moving to use of funds. So as you know, Hela is raising 4 billion rupees from the 20% IPO raise. How this 4 billion rupees is being earmarked is what's explained in this particular slide. Starting off with 2 billion that is used for a balance sheet restructure. Essentially what that means is we are using the funds that are raised in Sri Lanka to settle some of the legacy loans that we have within Sri Lanka. And by strengthening the balance sheet at holding level, at group level, we will leverage it at the African subcontinent level for the expansion drives that we have in Africa. As I mentioned in one of the previous slides, there is the substantial revenue growth is coming out of the African continent. So settling of debt financing in Sri Lanka, leveraging the financing into the African subcontinent to support that growth is what this whole balance sheet restructure is about. Moving to vertical integration, the chairman also spoke of it. Being in the apparel industry, especially given that we are growing significantly, hitting the $300 million mark, one area that we need to focus on now is our supply chain security. And in apparel, the fabric raw material is the most critical supply chain security we need to invest into. And something that Hela is now going to go into in the next few years to support all the revenue growth and the expansions that has been earmarked. In addition to that, on the ERP side, Hela at the moment runs on multiple MIS solutions, which is something that we've inherited given the few companies that came together 5-6 years back when Hela came into existence, or when the Hela group was formed. And again, given that we are growing to the scale that we are from a governance standpoint, from a control standpoint, from a visibility standpoint, we believe that we need to invest into a fully fledged ERP solution. And SAP is a solution that has been earmarked, it has been approved, and the project has been kicked off as well 6 months ago. And we're on track to have it rolled out in the next 12 to 18 months. Apart from that, the next scale of investment, which is 400 million rupees, is being earmarked for productivity improvements and automations. So Hela's profit improvement in the last few years has been essentially around profitable customer focus, overhead optimization, and given that we are reaching the very high scales, $300 million plus, the next leg of profit improvement, margin improvement is going to come from manufacturing efficiency improvements. And that's where that leg of investment is going into, investment in automation and productivity improvements. So with that, it brings me to the end of this particular slide and my section as well. We move on to the next section, which is the IPO highlights, for which I invite Deshan to take on the podium.
Thank you, Moise. First of all, to remind everybody about the key information about the IPO and the key dates. The IPO opens on the 12th of January, and we hope to close on the same day. The IPO will be priced at 15 rupees per share, raising in total 4 billion rupees for a 20% stake of the company. This would mean that the post-IPO market capitalization of the company would be 19.5 billion rupees, which amounts to roughly $100 million US. All existing shareholders of the company will be locked in for a period of 6 months post the IPO. If I can touch on a little bit about why we feel that this is a good investment to make. First of all, this is the first global apparel manufacturer to list on the Colombo Stock Exchange. The apparel industry, as you know, is one of the leading industries in Sri Lanka, and a lot of Sri Lankan companies have also done phenomenally well all over the world. However, up to this point, you have not been able to have an opportunity to invest in this sector. Hela will be the first opportunity that you will have, and therefore a good opportunity to get exposure to this world-leading industry. Secondly, it's one of the leading apparel manufacturers in Africa, and this is something that Dilanka touched on as well. Africa is the last frontier, and getting exposure to this fast-growing market again, you have an opportunity to do so through this IPO. Number 3, as Moise touched on as well, the company has seen strong revenue growth and improving margins over the past few years, and we expect this to continue over the coming years, as well as some of the investments that the company intends to make starts yielding returns. And number 4, this is a 100% USD revenue company, which means that you are hedged against any weakness in the rupee in the future, and any dividends that you receive will also be hedged to the US dollar, because the company will earn revenue in US dollars, and therefore you will be hedged. So for these reasons, we believe that this is a great IPO to invest in. As we come to the valuation of the company, we have primarily relied on the discounted cash flow method to value the business. And taking into account all the growth that we are going to see over the next few years in the company, we have valued this share at 19.25 rupees per share, which effectively means that at the IPO price of 15 rupees, you have a 28% upside on the investment. In addition, you can expect a 33% dividend payout each year, which amounts to about 5.7% dividend yield on an ongoing basis. And again, I can remind you that this would be dollar linked, so if there is any further weakness in the rupee, your dividend will reflect it as well. When you look at the price earnings ratio, the IPO is priced at 10.5 times price earnings for FY22, compared to the industry, which trades at 14.5. So there is a significant discount to the industry. And in terms of peers, we have taken TJ Lanka and Hela's Fabric, which are the closest listed peers for this purpose. But if I can emphasize 2 points here. Number 1, Hela's Fabric and TJ Lanka are not direct peers or comparators to Hela. And that's because both of these companies are fabric manufacturers, whereas Hela is an integrated apparel solutions company. And usually, when you go further downstream and you get closer to the customer, the margins increase because you are closer to the customer, and therefore there is more value that is being added. And in this light, although we have taken these two companies as peers, Hela should, in theory, trade at higher than these two peers. That's number 1. Number 2, when you look at the peers and when you look at the growth that's been estimated by analyst consensus for 2023, the price earnings ratio, the forward price earnings ratio for the comparable companies is at 11.3 times, whereas with Hela, it's at 6.9 times, which showcases the fact that there's going to be, we expect significant growth in Hela for FY23 as well. So this growth momentum will continue into the next year as well. And so for these reasons, we believe that it's a very attractive investment opportunity, both in terms of the investment thesis, as well as the way in which it has been valued. Thank you.
Thank you all for that overview of the company and the details of the opportunity available to IPO investors. We have now reached the Q&A portion of the session, and we've already received a number of questions, so I'll just jump straight into it. The first question is to Delanka, and it's focused on the latest expansion in the company's global footprint. Specifically, what is the status of Hela's operations in Egypt, and are they on track to begin in 2022?
Thanks, Adam. So as far as Egypt is concerned, so we've been in the integration phase since August last year, and we have just completed the company incorporation process, where over the next couple of days or weeks, we will have the import-export licenses, and then we are aiming to start production on time and as per plan and forecast that we have factored into our prospectus. So yeah, so things are very much within the timelines.
Would you also ask questions?
Sorry, we'll take a question from the media after the end of the live stream. Thank you, Delanka. So the next question is more finance related, so I will direct that to Moise. How is the mandatory requirement to convert export proceeds to local currency affecting Hela?
Okay, so as far as the mandate requirement is concerned, There was a circular issued by Central Bank about 2 months back, I think was in late October, early November. That circular spoke of this concept of residual export proceeds, where it spelled out a formula which says that your export proceeds, dollar export proceeds, after deducting various allowable cash outflows, only the residual amount needs to be manually converted. And given the formula and the benefit of the formula, the impact to Hela is actually minimal and definitely manageable within the resources that we have.
Thank you, Moise. Further question on the IPO valuation, specifically in relation to the benchmark price to earnings ratio as mentioned during the presentation. Given that both Haley's Fabric and TJ are fabric manufacturers rather than cut and sew apparel manufacturers, is the comparison with Hela on a PE ratios appropriate? Zakir, if I may ask you to take up that question.
Thanks, Adam. So, as Deshan mentioned during the presentation, there is no direct peer for the company, so we had to rely on proxies. So the closest listed proxies that are currently trading are the two fabric manufacturers. But as you know, the fabric manufacturers are more downstream, and companies such as Hela, which is an integrated apparel manufacturer, is more upstream, closer to the customer. So ideally, it should be trading at a premium to what the fabric manufacturers trade at, but in our pricing, we have used a discount, a significant discount to the multiples that the two proxies are trading at. Also, if you look at the Asia Pacific region listed players, they are trading at around a PE of around 17.8 times. So compared to our Hela's multiple of around 10.5, so that's a significant discount already to factor country differentials in terms of valuation.
Thank you, Zakir. Unfortunately, due to our tight agenda, we've run out of time, and I apologize to anyone whose questions we didn't get to reach. We'll try to get back to you over email on those questions, and you're very welcome to reach out to the joint managers to the issue, CT, CLSA, and CAL, with any queries you may have. To close the session, I would now like to invite Ms. Nadisha Wijesinghe, Group Chief People Officer for Hela, to provide the vote of thanks.
Ladies and gentlemen, we are now ready to conclude this event. First of all, a big thank you to everyone, all of you who joined us online today, and for all of you who are physically present with us here. We hope that our story inspired you, and the journey we are going to take excited you, as it does to all of us as we work at Hela every day. Both Mr. Asaya and Dilanka mentioned that we are a social capital-focused company, that we put people first. And what we have seen again and again is that when we put the people first, the people then take care of the customer, the consumer, the profit, and the planet. A special thank you to the media teams here for your valuable presence. We are also very grateful to the head table for their guidance and the vision. A heartfelt thank you to our Hela family who stayed with us through thick and thin. And now, as we all stand together and we are all ready to bravely go where no apparel company has gone before. I wish you all a very happy new year, and may all your dreams come true in this new 2022 year. Thank you.
3 decades ago, Hela set out on a mission to change the apparel game. And now, 3 decades later, we're still pushing the boundaries of what's possible. At Hela, we're testing our minds to be different, to be better. We're always on top of our game with a vibe that keeps it fresh.
Hey, maybe you've heard of us, maybe even seen our logo, but you've definitely seen our work.
We're the team behind the team that brought you what you love to wear. We're the dreamers and the innovators imagining a more sustainable tomorrow. We're the ones leaving our mark across the globe, doing things that have never been done before, with our teams in New York to London to Paris. And our factories in Sri Lanka, Kenya, Ethiopia, and Egypt. Our operations extend across the map. We've got the power, the drive, and the teams to take on any scale of production. It's a grind that won't stop, with limits that are never confined. Launching new initiatives such as Hela and PACE that not only economically empower our workforce, but also educate and enrich the lives of our global family, along with providing over 5 million litres of fresh water. And that's why we say yes to creating a better planet, and no to single-use plastic, waste, or any liquid discharge at our multiple factories powered by the sun. These are the people we would do anything for, the legends behind what we are today, the ones pushing the limits of apparel.
But that doesn't mean we're done. We're only just getting started. We are Hela.
Okay, I think the live stream is now ended. Thank you everyone in the room for attending, and apologies about not taking questions during the session. We can take any questions any media representatives have now. Yeah, go ahead.